Okay, in this video, I'm going to talk about the easiest damn trading strategy, the simplest damn trading strategy. We're going to call this the Mike Pugli's trading strategy. Just kidding. Most of it's come from the OG Raja Banks. That's who my mentor is, pretty much who I've learned from over the past couple of years. I've learned from quite a few people over the last couple of years, but the one that has really changed the game for me is Raja. And so my strategy is very much based around Raja's strategy and kind of the things he talks about with the smart Raja concepts and such. And yeah, so with that said, let's dive into it. Like I said, I just want to kind of go over the trading strategy, what I do, what I trade, stuff like that. So the main pairs that I trade is GJ and gold. Those are the only two pairs, not the main pairs. Those are the only pairs. You look at my watch list, those are the only two pairs there. So GJ and gold are the only pairs I trade. I only trade New York session from 6:30 a.m. Eastern time to 9:30 a.m. Eastern time, and I only take one trade per day. So that's the basis of my trading strategy. So just to recap, GJ, gold, New York session only, one trade per day. So those are the basic like four things from my strategy. So how do I find that one trade per day? So first things first is I go to the charts and I do a top-down analysis. So I go to GJ here and I can see, okay, cool. The past candle here is bearish. So because it's bearish, my bias is going to be bearish. And so the reason that I say that it is bearish here and not bullish, because even though it's a strong rejection, it's because, you know, we're at a very high level here. So I'm anticipating some sort of retracement here. So my bias based on, you know, the daily candle is going to be bearish. And then my bias based on the 4-hour candle is actually going to be bearish as well, because price is going down. So now this is kind of where you need to start thinking about what direction are you going to trade. So on a very simple level, you know, we're thinking about daily time frame here. We have a bearish candle, and realistically we would like to see the same thing on the 4-hour time frame. So we would like to be trading when the 4-hour candle is bearish. Now right now when I'm recording this video, it's 4:41 p.m. It's out of any type of volume time session, so I'm not like technically looking to take trades at this time regardless, but you know, just for the sake of this, you know, I prefer to trade in the direction of the daily and the 4-hour candle. And if the daily and the 4-hour candle aren't coinciding in the direction, then I'm likely not going to look for a trade. But anyways, to do a top-down analysis, you know, we're going to look at the daily time frame. We're going to identify support and resistance zones. So resistance levels are basic areas. It's like the roof, it's a ceiling. It's where price moved up and it started to turn around. And then support levels are where price came down and started to come up. So the most recent support level is here. The most recent resistance level is here. And the reason that this is a resistance level is because price came up, started to come down, and then went up. And this is a resistance because price went up and then it started to come down. And so it might come down here to retest this support. It might stop here in the past because we can see another support level here, another rejection level here. So that's kind of what we need to identify in the lower time frame. So if we go to 4-hour candles here, we can see, okay, cool. You know, this is the last, you know, support level that we've really seen here. You know, price came up, and then it started to go bullish, and then we had the weekend, you know, market gapped open, and now it's coming bullish, and now it's flipping bearish and coming down. So let's identify the most recent support and resistance. So this is really going to be the most recent support because we had bearish candle and then bullish candle. This is going to be the most recent resistance down here because we had bullish candle and then bearish candle. So let's see what we look like on the hourly time frame. And so on the hourly time frame, we have most recent resistance right here because this is the most recent time where we had bullish candle and then bearish candle. And then we came down and here's a level of support. So let's move this level up here. So now we have identified that there's a level of support right here, but look, it's the same thing that we had earlier where it is a bearish candle and then bullish candle. So price came down, went up, started to come down, went back up. Now we have a support right here. So that's essentially how I identify the zones. And so the last time frame that we really want to look at here is the 30-minute time frame. So we have a 30-minute support here, price went up, came down, now it's going up, and we have a 30-minute resistance down here because price came up and now it's starting to come down. So we're in a range. So let's talk about tradable ranges. Now, if price came down here, then it broke the low, then I would be likely looking for sells here. This is only 18 pips down to the bottom. So with that said, it doesn't seem like it's going to be a tradable range to me. I like to trade ranges that are 20 to 30 pips minimum. And so with that said, this is going to essentially be a no trade range. So now we need to identify if price breaks these ranges, where do we think it's going to go? So let's look for buys. So we're going to say buys above this zone. Now let's see if this zone is going to be a tradable range, because we can see we have a resistance right over here and we have clean candles coming down. So if price breaks and closes above this area and continues bullish, it's likely going to tap into this area here. So let's see how big the range is. Whoops, didn't mean to do that there. So the range is 37 pips. Perfect. So we have a tradable range. So we have buys above, and now we have a target for our buy. So if we have price break and close above here, then we can anticipate price to continue up to there. Now let's see for sells. So we're going to say sells below here. Now let's see if this is a tradable range for sells to this resistance, or the support. So it's about 19 pips. Like I said, 20 to 30 pips is key. So that's not going to be a good area to take sells into. So now we're going to move this down here and look for another area that price can potentially go to. So in this case, we have to look in the history here. We see rejection, rejections, and now we see where the last, support level was down here, where price was bearish and then continued bullish. So we're going to put a line here. And we're going to go back to, the range that we're looking at here. We're going to mark it up and we're going to see how big this range is. So we can see this is a 43 pip range. Perfect. It's a tradable range. And so now we have targets for sells. So now we have zones that we know that we can trade in. If we have a break and a close above 168.265, then we can anticipate price to continue bullish to here. If we have a break and close below 167.703, we can anticipate price to continue bearish down to 167.247. So let's go back up to 4-hour time frame here. We see prices coming down. It's closed very strong bearish. Now it's looking like it's going to close bullish in 12 minutes or so. So being that the 4-hour candle is bullish and the daily candle is bearish, we really can anticipate price to go either way. It can either go bullish or it can go bearish. So there really is no overall bias. We just have to overall bias for the high time frames. We just have to see what's going to happen based on lower time frames. So that would be my analysis for GJ. And now entry points is a totally different topic. Maybe I'll create another video based on that if you guys want it. But I just wanted to cover how to identify tradable ranges, tradable zones in this video. Now let's look at gold and just break this one down just for fun as well. So if we go to daily time frame, we can see strong bearish candle, and the last daily gold candle close was weak bullish. So our bias over here on daily is obviously bearish just because price is melting down. And on 4-hour, we're looking bearish as well. We have clean range to fill, so it's perfect. So let's go to the daily here, and we're going to identify the most recent resistance. Price came down, moved up, and now came crashing down. Now this isn't necessarily like, this candle right here hasn't closed, so it's not technically a resistance yet because we have 10 minutes left in the candle. But I can just tell, obviously, the candle is going to close down there. There's no way it's going to reject all the way up to here within, you know, the next 10 minutes. And if it does, I'll be fucking crazy. So that's resistance, and then we have the most recent support there. Price came down, turned bullish, and now is going up. Now let's look at 4-hour time frame here. So we can see that most recent resistance is there, and we can see most recent support is down here. Price came down and is going bullish. Now let's look at the 1-hour time frame. Okay, cool. Now we have a lot of information here. So the most recent resistance is now way down here. So last time price came down, came back up to form a resistance to create a new ceiling, and then came crashing down. And then on the flip side, price came down and started to hit the floor and go back up. So that's the range that we're looking at here. So now let's look at how big this range is. Oh wow, 38 pips. So what we would want to see here is we would want to see a resistance formed. We would want to see a resistance form. So if this candle closes in 9 minutes bearish like it is, then we would have a resistance formed that could essentially break and then, you know, continue bullish, or it can form a resistance and continue bearish. So in this situation, you need to wait and allow more candles to print before executing a trade. And the reason that you want to do this is because price has come down and it's created a low. It's created a new low, a new session low, and price is now going up. You can't take buys as this candle breaks a high here. You can't take buys. This is not a sign for buys. And the reason is because this is a counter trend trade, because price is going bearish, it's created a low, and now it's continuing bullish. But let's look at 30-minute here. Okay, 30-minute gives us a lot of information for this area, and it's going to identify a tradable range for us, because this area right here is only 18 pips, that range is, so that's a no trade zone. And so we have a resistance up here, that was the old resistance there. So now we know, okay, perfect. Now if price breaks and closes above this area, we can continue bullish. So 68 pips, perfect tradable range here. So let's mark it up, buys above. And sells below. Oh shit, sorry. Targets for buys. I don't know why I just did that. It's been a long day. Buys above and then targets for buys. Now we need to go see where price can go if we break and close below 1628. Okay, cool. So most recent support is looking like down here. Perfect. And so is this a big enough range is the next question that we ask ourselves. Okay, perfect. 36 pip range. That's definitely big enough. So now we know sells below. Beautiful. And now we would just wait for two situations to happen. Number one, you know, we can look for GJ over here, buys with a break and close above 168.265, targeting this area here, 168.670, or sells below 167.703, targeting 167.247. And then on the flip side for gold, buys would be valid above 16.30.08, targeting 16.37.29. And then sells would be valid below 16.28.13 and targeting 16.24.34. So hope this helps you. If this did help you, if this did show you how to identify tradable ranges, tradable zones, then please like the video. And if you're new to my channel, please subscribe to the channel, turn on post notifications. I do live trading sessions, live New York sessions every day at 6:30 a.m. Eastern time, and I hope to see you there. So like I said, this video was covering tradable ranges, how to identify tradable ranges, and yeah, we'll catch you on the next one. Peace out.